Hello guys and welcome to your channel, the Smart Investor Tool. Tesla stock has been falling for the past few weeks, so in today's video we are going to check if the stock is expensive. We are going to do technical and fundamental analysis of the company. In the fundamental analysis we are going to focus on current valuation and growth expectation for the next 5 years, in addition to the company fair value. From the point of view of technical analysis, we are going to see the purchase area that I have marked, and by the end of the video we are going to check also our current position and the rest of our portfolio. Right now Tesla shares are above 50% above their fair value. We can see here the fair value is around $110 and the Tesla stock over $200. Also we can see the current PE ratio is above 62 points and the forward PE is also too high, 80 points. So in the short terms, looks like the Tesla stock are expensive. Let's check the financial ratios and then check the growth for the next 5 years. The PE ratio is well above its industry and the price to sell have the same behavior. But historically, we can see the PE ratio is more than 200 below the Tesla 5 years average PE ratio, and the price to sell is also around 44% below the Tesla 5 years average. Also, we can see here in the financial ratio show us that the company is very solid. We can see here the current ratio that compare the asset with the liability in the short term, and also the debt ratio that compares the asset with the debt in the short term. So the financial ratios are very solid. We can see here also the growth in the 5 years is incredible. The company was able to increase the revenue in around 80 billions in only 10 years, the net income in around 12 billions, and the free cash flow in about 7 billion. So very solid growth. Tesla is expected to continue growing revenue at the rate of 20% in the next 5 years, at least the revenue, but the same behavior in the earning per share. And the free cash flow, the expected growth ratio is about 40% per year. The problem here is with the current valuation, we are going to pay a forward PE 22 in 2027, and that is a high PE ratio, even with this growth per year. So let's check our current position and then the plan to increase this position. The last week we opened a position in Tesla, only 1.3% of our portfolio. You can see here in our portfolio that Tesla is one of our smallest position, but the plan is to increase this position. Let's move to the technical analysis. Tesla reached our first buy zone and also the RSI oversold. As we see just a few minutes ago, we opened a position 1.3% of our portfolio here. The plan is to increase another 1.7% in the 185 zone, and also increase another 2 or 3% in the main buy zone, which is the 160. Then if Tesla keep falling, we can make dollar cost average. The idea is to reach the fair value, and we can reach about 7 to 10% of our portfolio if Tesla reach their fair value. So let's move to the end of the video to talk a couple of points and just finish this video. As we see in today's video, guys, Tesla stock is still a little expensive. We opened a position last week just because Tesla reached our first buy zone. Also, the RSI was oversold, so we think was a good opportunity to start a position. But we think there is a good possibility of buy and increase position below $200. Remember to visit our investing tool. First, a link in the description. Also check our social network that we publish new content every day. Thank you and see you in the next video.